morning, everyone. Thanks for hosting me. I appreciate it, and you know, I wish I was honestly able to spend a little bit more time here, but unfortunately, it's just a couple of days in and out quick. Before I jump into it, last night when we were riding around the harbor, I noticed the poppies on the Opera House, and it's still November 11th back home. And I just wanted to take the opportunity, if there's anyone in the room who has either served in the armed forces. We have Veterans Day in the U.S. On November 11th. It's a little bit different than Remembrance Day, but if there's anyone here who has served or who has family members who have served, I want to say thank you personally. I'll take the opportunity afterwards to shake your hand. I know that there's a lot of sacrifice, not just from the veterans themselves, but from the family members of the veterans to enable them to do the great things that they do in the armed services. So thank you very much. Identify yourself later and I'll shake your hand and maybe take you out for a drink or something. What is BillGo? BillGo started in 2012 with a very simple vision that was to make people's lives better by enabling them to have a more efficient financial life. I know that sounds maybe a little bit grandiose, but in the US, the average American has 15 regular recurring bills. And those bills, on average, are paid through 5 different methodologies. Some people write checks for some of them. Some people share their bank account information, use credit cards, walk-in, retail, bill pay, a lot of different methodologies for paying those bills. And it's a very complex web. And when BillGo started, our mission was very consistent with what it is today. It was to create an efficient means for people to manage that complexity, to make their financial lives better, to make it so they could plan and pay those bills in a secure, efficient way. And we started that through an application-based methodology of allowing people to do just that, manage and pay their bills in one single place. And as the user base started to grow out, one of the things that bubbled to the surface very quickly once we stepped outside of our individual bubble in life was that there's one other thing that people needed to do, and that was to be able to pay their bills now. You know, many of the people in this room and you know, a lot of our friends, if we step out of our lives, people pay bills when they're due, or people pay bills when they have money, not necessarily when they're due. And that need bubbled to the surface from the user base very quickly, and we tried to figure out a way to address that. So when you look at the problem that exists in the US, there's a massive amount of complexity. We built the technologies to allow people to aggregate their bills and pay them in one place. And more importantly, people needed the ability to pay their bills now, when they have the money, not necessarily based on when those bills are due. We also have a problem in the US where 30 to 40% of the population is unbanked or underbanked. And there's a high cost, as well as a very slow means of making those bill payments. And that costs a lot of money, too. On average, between around $5 to make a bill payment that is on top of the balance of a bill. And if somebody needs to pay it now, it can cost up to $25 to pay that now. And that's an issue, especially for you know, parts of society that are underbanked who tend to have less funds. So when you look at the mission of EML and you look at the mission of BillGo, there's a lot of alignment in what we're trying to accomplish. Our mission is to make people's financial lives better with an efficient, secure means of making payments. And one of the things that we added to that more clearly as the business evolved was to do it in real time. Our financial institutions, the places where people have the ability to pay bills, they needed solutions that would allow real-time, secure, and efficient payments. So what we do is we enable those real-time payments. We enable those payments to be made in a single place with multiple different technologies. People get immediate credit for those bills being paid, which means on the merchant side, they process the payment and they get confirmation that they're getting the funds for that. And on the underbanked side, people don't have to pay those fees. Between $5 and $25, they get the real-time payments and they get immediate credit so they don't incur late fees, which is a major issue. On average, the underbanked and unbanked pay between $100 and $125 per month in fees between the fees to pay the bills and late fees. So we've been working to eliminate that by allowing people to pay it now in a single place. So if you take a look at the addressable market, they're very big numbers here in the US. On the right-hand side is business-to-business bill pay. On the left-hand side is the consumer bill pay market. Very large markets that we're able to address. As a company, we're more focused on the left-hand side than on the right-hand side right now, because that's where the greatest need is in our society. And we're able to do that pretty efficiently. Right now, we are working with about 8,000 banks and financial institutions in the US. We're working with them to help about 32 million consumers make their bill pay more efficient. And we're able to do that with technology that includes some technology that we built utilizing the EML virtual accounts, virtual cards, as we call them, to process payments in real time. Any questions up to this point? I can't see anyone because of the light there, so you'll have to speak up. So how do we do that? We do that with several different technologies. Our Fuse technology, this is the technology that we built to enable the virtual card utilization in bill pay for a real-time secure payment. The unchecked technology, this is converting physical checks into electronic payments. And the bank up technology, this is one where we don't utilize the virtual cards for payments, but we have direct connections for a real-time guaranteed bank payment. Something which doesn't exist right now in the US is the ability to do that real-time guaranteed bank payment. So what we're doing with these technologies is connecting sources of payments to destinations. And that's really a big part of what BillGo is our network of destinations. We have about 12,000 integrations with merchants in the US right now. Those 12,000 integrations allow 90% of people's bills to be paid electronically in real time. Sounds like a big number to say 12,000 merchants. It does cover 90% of the bills that are paid, but in the US we have roughly 4.5 million merchants that we have to build out integrations to. So this is a big part of our today, and it's also a big part of our future to allow people to be able to pay all of their bills in one place in real time, is building out that network. And that's what the technologies in the middle of the diagram here enable us to do. So it connects the sources of the payments with the destinations for a continuous loop. And the continuous loop allows the payments and the information about payments to go from the people who have to pay them to the people who have to receive the payment. And it also allows a feedback loop to go all the way through. And that's a big part of what's different about this versus other things. It's important that we can make a payment now in 3 seconds for somebody. It's important that people can get credit for that and they can do it at a very low cost. But what's really important to both the network of destinations where payments are terminated, as well as to the bill payers on the other side, is the feedback loop. That the payment is made now, that the merchant knows who that payment is for and can apply that payment immediately and get the funds immediately for that, and that the person who's paying the bill can get the confirmation. Not a confirmation from us, but a confirmation from the merchant that that bill is paid right now. So that continuous feedback loop is a big part of the value, and it's a big part of the challenges that we addressed with our partners at EML very early on, and we continue to address every day, is how to get that feedback loop going and how to keep it efficient at scale. Any questions up to there? All right, great. How am I doing on time? Perfect. All right. So, you know, it takes a pretty amazing team internally as well as externally to be able to make something like this happen. If you take a look on the right-hand side of the screen, there's, you know, some of the key leadership people in operating roles, as well as as board directors of Bilgo. We've got a strong team with a lot of history in bank technology, with a lot of history in payments, with a lot of history founding and building successful companies in this space as well as in other space. You know, if you take a look at it, we have 5 former CEOs as part of our operating team at Bilgo, all pulling towards doing something bigger, better, and more successful. We've got a board of directors that includes the you know, the founder of the original bill pay functionality that was built in the 1990s in the U.S. We've got directors who are experts in security and fraud. Obviously, moving this much money on people's behalf, it's something that we have to consider. So we've got a lot of expertise and people pulling towards doing something really meaningful and changing people's lives, and, you know, building something more meaningful than we believe any of us could do individually. Compliance and risk management. I mean, when I look at the things that are key factors for EML, a lot of it's the same for us. It's one thing to make sure that we have the right certifications as an organization, but it's another thing for us to internalize it. The regulatory body that oversees banks, large banks in the U.S. is called the OCC. When we were building out our organization early on, I think I came in and I was employee number 18. Probably employee number 23 of our organization was a director from the OCC to make sure that as we built out our programs, we were dealing with the right anti-money laundering and bank security aspects of things, because we're working with financial institutions. And obviously with so many virtual accounts, virtual cards, you know, creating and processing hundreds of thousands of them every single day, information security is pretty important to us as well. So these are core foundational principles that we as an organization work with, and as we work with EML, are very important to us going forward. But it's all about partnerships. You know, if you go back to the slide where we're looking at the source of payments and the destination of payments on the origination and the termination side, the payment sources, working with financial institutions, banks, credit unions, retail bill pay sources. We also work with a financial institution in the U.S. that's focused on the military. We have a couple of veteran founders and key people in our organization, so that's an important thing for us as a team. But getting the right integrations to enable people to make all of their bill payments in one place is something that's critical to the success. And at the same time, moving this much money, we need the right partnerships with financial institutions to allow the money to move in a secure way, but also to utilize technologies like the virtual accounts, the virtual cards, to make those payments and to provide the feedback loop was something that was really important to us that allows for those real-time secure payments. You know, we started out working with EML when, if Dan, one of our founders, was here, he would probably shoot me for saying this, but when we were not much more than a couple of great ideas and some phenomenal engineers, the team from EML saw what we saw as the potential and you know, joined in with us and helped us to build the technology that allowed these payments early on. The team has a lot of strength in its network ties. The card networks, MasterCard, Visa, Discover. This is something that the strength of those network ties is absolutely invaluable because as we do this, you stir the pot a little bit and you create friction. And having strength in those network ties allows us to be able to do some things that are more challenging and you know, to open the payments up to more people in very short order. And the team has evolved with us. You know, if you think about that feedback loop and if you think about what we're doing, in a matter of 3 seconds, we create a virtual account or a virtual card, we process a payment, we get feedback on that payment. I'm sorry, we fund that virtual card for the amount of the payment, we process the payment, we get feedback on that payment, and then over time, that payment settles. And this is happening hundreds of thousands of times every single day. So the technology to allow this to happen and quite frankly to reconcile all of this is no small feat, and we couldn't have done it on our own. You know, the EML team has enabled us to do that and to scale it pretty aggressively. This is how we have, this is you know, about a 1.5 year window here, and this is how we've been able to bring this to enough people that we're processing a material amount of payments every single day, every month, and we're making people's lives better through that. So, any other questions on what we do, how we do it with our partners at EML? Yes, sir. Do you mean, do you see beyond that?
Yeah, yeah. I mean, like, what was the difference to scale and was the system sort of, you know, able to handle the amount of volume of transactions
So EML adds significant value to that process. When we were over here on the left-hand side of this chart, we had to process, our goals were processing 5, 10 payments per minute. Now we're in the realm where we're processing 500, 600 payments per minute. We could not have done that completely on our own. The scale going forward, I mean, you guys can do math pretty well, I'm sure. There's lots more headroom in terms of this as the adoption goes deeper within the financial institutions and the banks with their bill pay solutions. We have not had any challenges that we together haven't been able to address, and we've actually got the capacity working with the team for more than what we're doing right now, significantly. Yes, sir.
Do you generate your revenue from the customer side or the merchant side?
Yes. So historically, the entire burden of bill pay in the U.S. has been with two individuals or groups. It's the bill payer as well as the bank. We feel that it's appropriate that that burden gets spread equally throughout the ecosystem between the bill payer, the bank, and the destination, the merchant who's receiving that payment. And what we do does spread that somewhat equally throughout the ecosystem. So it's both sides. Any other questions that I can't see? I do. I guess that's part of the whole idea, right? Make it so I can't see, and then it anonymizes it for me. All right. If there's no other questions, I think I did pretty well on my timing for what I was supposed to do, and I didn't take any extra time. Thank you, guys. And I'll be around if anyone has one-off questions.